right, time now for futures in focus. Oil futures are rising today, still getting a boost despite the fact you have the stronger dollar and a rotation again within the equity market, and despite the fact that OPEC just cut its demand forecast, saying the effects of the virus will linger for next year, cutting the call on their crude in the market. Well, Chris Wright, Liberty Oilfield Services Chairman and CEO, joins us now. Liberty provides technology to enhance the efficiency of drills in the U.S. shale space. Okay, Chris, it's great to chat with you. Part of it is the rally that we've seen, and part of it is the rally that investors think we're going to see. If you take a look at the curve, December to June, I mean, we've really come in. The difference is barely even noticeable. Is that even sustainable?
Thanks for having me on the show, Alex. And I suspect it is. Demand for oil just depends on economic activity in the world. If the economy is growing, demand for oil is growing. So, the last few months, we've seen a pretty strong rebound in the economy from a deep low. And I think it likely continues. You may see a slowdown in Europe. There may be a little bit of a slowdown here in the U.S. China and a lot of the rest of the world is actually coming back pretty good. But, only the future will show that.
Right, and I'm glad you brought that up because we just had a segment talking about the virus, potential lockdowns here in the U.S. if we wind up following Europe. How responsive right now are shale producers to regional shutdowns?
Well, it's really what's the impact on demand. So if it means a lot of people were commuting to work and they reduce, then there's a loss of oil demand there. We've seen almost record home demand for energy this year. So there's some offsetting factors too. Really, producers are going to respond to prices. If they believe the prices are going to stay in the 30s somewhere, you're going to see activity curtailed. If you're going to see prices a little over $40, I think we'll see a continued increase in activity.
Chris, good morning. It's Guy in London. I'm really curious about the election and the impact that it's going to have on this industry. And your perspective on this is really important. So talk to me about what you think gridlock is going to look like from the oil industry's perspective. We're not going to see much happening in Washington, potentially with split government. What does it mean?
Yeah, I think that's right. We're going to have a divided government with the most moderate Democratic candidate that won the election and will be president. I think we'll see some changes. Certainly, there'll be an increased focus on our industry doing things well and continuing to improve, but that's what our industry's been about. The most concerning thing that's talked about is, this stopping of drilling on federal lands or a ban there. I'm not so sure we'll see that. The net result of that would be increased greenhouse gas emissions because that oil production would just be produced somewhere else that's less clean, and less jobs and less tax money in the state of New Mexico, for example. So there's a risk of that, but I'm not certain that's going to happen.
Sure. It feels like the more immediate concern is overall increase in cost of drilling, and particularly when it comes to flaring and methane emissions, maybe a carbon tax. So things like that, they're just going to make it much more expensive for operators to work. What do you think happens out of that? Are they able to operate? Are some areas not developed where there should be? Does it spur more M&A?
Yeah, it would move activity levels, very tight regulations on methane flaring, which is a good thing, which is the way the industry is going anyway, means that activity would be concentrated where there's already infrastructure. Some areas where the gas gathering lines are not there yet, activity might move from there. So I would cause a change in plans. It would be a little bit disruptive, but I don't think largely so.
In terms of how the industry is changing, one thing we've certainly seen, and we've spoken to Concho, we've spoken about Concho over the last few days, Parsley, the industry is consolidating. What does that mean for you?
Yeah, well, and as you know, we're consolidating too. We have announced a large acquisition a couple months ago that will close in a couple months to take over Schlumberger's frac assets. It'll make Liberty much bigger. I do think on the other side of sort of this, what I call the equivalent of the dot-com bust in the shale revolution, I think we're going to see fewer E&P companies and fewer service companies, but larger, more efficient, more technically savvy players. I think it's the continued trend towards our industry getting better and more efficient.
So how does that affect your pricing ability?
That's really supply and demand. There is going to be fewer customers, but there's going to be fewer suppliers too. Pricing's very stressed right now, Alex. I think that continues for several more months, but the amount of manned frac fleets is quite low right now. I think they'll all be used soon, and then there's probably a little pricing pressure required to reactivate more frac activity. So I think pricing is going to be weak, but probably not as weak as it is today.
I'm also curious, we have about 45 seconds left, but is the type of things that your producers are asking from you changing? And that do they need more energy efficient work? What are they asking for you that's different right now?
Yeah, customers want better design technologies to make wells cheaper that produce more oil. Customers are also looking to reduce their environmental footprint. Look, the biggest driver of reduced greenhouse gas emissions in the U.S. and the world is natural gas displacing coal and power production. We're seeing a similar move happen in frac fleets that are mostly powered by diesel, but they're moving towards more natural gas powered, either in reciprocating engines or towards electric. And producers are embracing that. I think we'll continue to see the cleaning and greening of oil and gas production in the U.S.